Hey guys. So we are on to the fun part now, which is choosing an index fund. And so you've already set up your account, you're ready to go. Now you just need to know what to choose to put into the account. So this is where a lot of people actually go wrong with investing is they think that when they set up an account at a brokerage account firm, they end up just putting their money into what's called a money market fund. And so the money basically gets transferred. Let's say from your bank account, you actually move money in to your account at, let's say, Vanguard or Fidelity. But then what ends up happening is the money just goes in and it sits there in almost like called like a money market fund, which is like a bank account. So you want to put your money to work though. And so this is where you have to take those next steps and become a little bit more involved in the process. And this is where you get to be intentional about choosing what you want to invest in. And so for me and what I share with you and everyone I know is to put your first investments in something easy that matches the market to a certain degree. And so I like to choose index funds, which are, again, a basket or collection of stocks that are all wrapped up into kind of one fund. And the ones that I like mimic the S&P 500. So we've already gone over that. But what I want to do is share my screen with you now and take you through a few of my favorite index funds that I like to invest in. Now, in no way am I an expert at this. Okay, so I have to give you that disclaimer again to know that you need to invest at your own risk, do your research. You're more than welcome to choose any fund out there or any stock out there that you feel aligned with. I'm only giving you the ones that I invest in as examples, okay? So that you can take a look at them with me and you can see what I see in the market. And so I can show you and kind of reassure you, over time, this is why I chose it because, it fits what my goals are and the risk tolerance that I have. So what I want you to do though is look at them as well, make that decision for yourself, and then don't delay on pulling the trigger. Okay. I want you to pick, one or two to get started and to go ahead with this because this is where a lot of people stop. This is where a lot of people get that fear that comes up. And I don't want that to happen for you. You can also remind yourself that whatever amount of money you do send in to the money market fund to sit in that account, you can allocate only a small amount to start into one of these, say, index funds or stock. Okay. Some of the index funds have a minimum buy-in. So I'm going to show you that. For example, the Vanguard 500 index fund, I believe, has a $3,000 minimum buy-in. But in the greater scheme of things, that's not a huge amount. You could send money even if you're starting with $100 a month or $20 a month, send money over to that money market fund until you build up enough. And then when you get to that goal, go ahead and invest in the fund that you like. Okay, so there's many different ways to do this, but don't hesitate. If you're ready, if you have the money ready to do this, then go for it. Go ahead and get in. You'll hear me say many times, there's no like bad time really to do this. I mean, if you're trying to be a perfectionist at this, and yes, if you're really wanting to like, you know, make the most money, you want to become more savvy and learn when the market is peaking and when it's in a trough. And you can do that with the charts, which I'm going to show you. But I don't want you to get too hung up on timing because that's one of the biggest mistakes that investors can make, which is trying to time the market. You're going to do much better if you just get in and let your money sit and compound over time rather than trying to get in, trying to time it when it's high. It's going to be very difficult to time that. A lot of times when we have the market peaking, it happens very quickly. It could gap, let's say, from, you know, one price that's like, say, $20. It jump in price to 25 in just minutes, and you could miss that. And so if you're looking for that, that's where you want to start becoming very aware of the charts, and the timing comes into play when you become more into the charting and the rhythms and looking at when things are going up and when things are coming down. There's even technicals that you can use to your advantage to try to time things, but really that's advanced trading. And to me, that's a little bit more like gambling. It's trading rather than investing. Investing is I'm getting in to the market and I'm letting my money work for me. I'm going to let it sit in the market and do its job for me. And this is really the beauty of this course, is that I want you to feel relaxed and I want you to feel like this is easy. Okay. So I'm going to go ahead and share my screen, and I'm going to show you guys the Vanguard 500 fund. So you should be able to see this. And all that I did was, to get to this, I went to our yahoo.com, and then here you can click on finance. Okay. And it will take you to the finance.yahoo.com page, which is my easy and fastest way to look at index funds and to look at stocks, to see how they're doing, to see how the market's doing overall. I have the Yahoo Finance app on my phone, and I pretty much look at this daily as a daily habit. I click in to this so that I can look and see what we are doing in the markets. I love to take a look and see what they are, how they're performing, and how things are going. Okay, so I'll show you that in a little bit. I've got right here the S&P 500. This is what I always check on. I click on this because this is the S&P 500 chart. And so it's going to show you, this isn't an actual fund that we're looking at yet. This is in general how the S&P 500 market is doing. So this is an index. Again, this is 500 of the top companies in the US and their performance. Okay, so 1D is 1 day, 5D is 5 days, 1M is 1 month. So we're going to look at maybe a year to see how we've done over the year. And as you can see, over the past year, we have done really well. It's gone up pretty significantly over the year. As you scroll down, you can look here and see what the open, the close was, all of the things that are going on, the volume, the amount of people that traded. It's a huge amount, right? And so you can look through the news for different things on here. This is why I love this app so much. But it gives you that quick snapshot, okay, of what we're looking at. And the year, it shows you right here, we're up 30% just in this last year. On average, the S&P 500 does about 10% a year. That's an average. So we're having a really big gain this year. This is for 2024, almost the whole year of 2024. We're in November. But yeah, I mean, this is going to show you through that whole year what we've seen, what we've experienced. And as you can see here, we've had down days, down weeks, right? Where the market just dipped that quickly and then it recovered and then it dipped and it recovered. Okay. And then it dipped and it recovered. And you can see that the overall trend is up. This is the overall trend of the market. It's going up over the year. This is why I like index funds, because for the most part, they're following different indexes. And some of them follow technology, some follow healthcare. This one in particular, this is the S&P 500, it's the top 500 stocks. There are index funds that follow or try to mimic this fund. That's what's very important to note with an index fund. Okay, so what we're going to do is we're going to go into Vanguard and I'm going to show you guys some examples, okay, of index funds. But this video is just to show you and talk to you about index funds themselves and what they are. So it's very important to note that you get diversification with an index fund. That means that it's it is a collection of stocks. So you're already diversified. That means that you are in many different stocks at the same time by being in an index fund. So you don't have to worry about one stock that you invest in dropping in value, okay? Also, there's usually a consistency in their performance. So like I said, over time, index funds tend to trend up. And there are many, usually there's a group of people that are a team of people. Sometimes index funds are controlled by computers, which makes them even cheaper to as a cost to invest in. But usually there's a team of people. So say at Vanguard, there's a team of people who have come together, who are in charge of looking at how much we're going to put into our S&P 500 index fund. Okay, so at Vanguard, they're not necessarily investing exactly as what you see here in this S&P 500. They are using their precise like computers and their knowledge. They're going in and saying, okay, maybe we'll do a higher percentage in technology, and from whatever 500 stocks are in this S&P 500. Okay, so I don't want to go into too much detail on this and like blow your mind with it. I'm just giving you the education just to know that they're diversified. Usually there's a consistency in their performance, meaning each year by year they do, about 10% or more. Some years they go down. They're easy to understand, and that is really key. For us with this course, you want something that is like, okay, I generally know that like I'm investing in something that is pretty much going up over time, and it's invested in about 500 different stocks in the US that are doing really well. That's much easier on you so that you don't have to worry about one particular stock Is it up? Is it down? Do I need to get out of it right now? Do I need to get into it? Do I need to watch them all? That's trading. Okay. And there are benefits to that. You can over time learn and improve your performance. Okay. You can get a higher amount of interest going when you're investing in individual stocks. But you don't necessarily need to do that to get started. We want this to be easy. Also, with an index fund, it's pretty liquid. So, what I mean by that is you can send money in, you can buy in to the index fund, you can be in it for a certain period of time if you like, and then you can sell out if you need to. Now, with other things like CDs, when you invest in those at a bank, you're locked in, for a certain amount of time. Your money's tied up. If you invest in real estate, your money is locked up. Okay. With investing in index funds and stocks and ETFs, you can enter into the market and you can exit. Now, if you do invest it into a Roth IRA or traditional IRA or your 401k, there are penalties if you do pull out the money. It's still yours to pull out if you want, but just know that there are tax consequences if you do that early in certain types of accounts. With your own taxable account, there's really the only penalty you'll pay is the taxes on the capital gains. Okay, so we all have to pay our taxes on, the gains. Now, the other thing to know is that when you're investing in index funds, it's fairly passive. And that's really the true benefit, I think, to investing in this. I set it and forget it. I have set my automations, which I'm going to teach you to do in this course, in a way that my money goes from my bank account to my investment account. From my investment account, it goes into the index funds that I choose to have invested in monthly. And then those continue to grow over time. I don't worry about pulling the money out or what day do I need to invest in? I need to go look and see. I've automated everything. Okay, so that makes it passive. Also, what makes it passive is that it's compounding over time. So as it's compounding and my money is growing, that is passive income coming to me. So what ends up happening is in that index fund, let's say it goes up in value, then that money continues to grow upon itself over time, right? So this is where I want you to see the benefits to investing in an index fund as opposed to, say, a stock or a bond or a CD or real estate. There are benefits to all of those as well, but I found that index funds are truly the easiest. And so that's been my go-to. Now, in the next video, I'm going to show you guys the way that you can go in to Vanguard or Fidelity, whatever brokerage firm you're using, and how you can look at different funds. Now, I'm going to show you, you can also do this in Yahoo Finance. You can use their search bar at the top. If you find out what the ticker symbol is, and I'm going to show you how you can find different funds in, say, Vanguard, for example. Once you find those, you can come to Yahoo Finance or use the app on your phone, and you can type in these ticker symbols. So, for example, the Vanguard 500 Index Fund, The ticker symbol for an index fund is usually 5 letters. Vanguards always start with a V, usually. So VFINX. And you see here in the drop down, right away, it shows you Vanguard 500 Index Fund. And that's the one that we want to look at. So I'm going to show you this as an example so you can see this fund and what I'm looking at when I'm doing my research. So you can see that this fund, let's go to the year. This fund, if you notice, this chart looks pretty close to what we were just looking at, which was the S&P 500. This is the S&P 500. You can always click on this during the day if you want to check and just say, oh, I just want to look and see how the market is doing in general. This is the 500 top US companies and how they're performing. This that we're looking at is a fund that Vanguard created that mimics this S&P 500. Okay, so it's very close to what you see here, but not exactly the same. So I want you to get that too. This is just a representation. Okay, and you can see here over a year, this fund has done pretty close to what the S&P 500 did over the year. 30%, almost 30.5. Okay, so it's done really well. Now, to give you more information to kind of show you what this fund invests in and the price and all of that, you can look at this pretty quickly. Year-to-date return is just showing the year-to-date, meaning the year of 2024, not the entire year from November to November. So that's why the chart above, we're seeing a whole year. Year-to-date just means the year-to-date from January to November. This is how much we've gained. The expense ratio, we're always looking at this expense ratio. Whenever you want to invest in a fund, you want this number to be as low as possible, okay? That's your cost. This is how much it costs to have Vanguard basically managing this for you, kind of like choosing the different stocks and the allocations, how much they're putting in to have this fund be a complete fund. And so this is what they're charging, 0.14%. We want this number to be as low as possible. So whenever you look at your research on here, this is what you want to look at. It kind of gives you the category here. It's a large blend of funds. It gives you the last capital gain, what Morningstar is rating it at. It shows the total net assets, 1.28 trillion. It's really a lot. It's high. Okay, so just you can see all of this here. And the dividend it even shows you how much of a dividend it pays out, which it's paying a pretty good dividend as well. All right, so then if you continue scrolling down, you'll be able to see the year-to-date return, the 1-year return, the 3-year, the 5-year. It gives you an idea there. If you continue to scroll down, it shows you the holdings, okay, of the fund. So this is where you can do your research. You're going to go into Vanguard to find funds that you like. And I'm going to give you a couple, in this video in particular that you may want to look at. Again, I'm not an expert. These are ones that I like. They're ones that I find to be easy, that do fairly well. And some of them I'm in, some of them I'm not. Some of them I've been in the past. So it's, again, up to you which ones to choose. But you can see here, once you get an idea of a couple of funds, index funds, then you'll want to come to Yahoo Finance and you can look at this more deeply. You can type in that ticker symbol and you can see more things about the fund. Okay. And you can do that also on, say, Vanguard or Fidelity. I just like using Yahoo Finance for that because it's just a little easier. So you can see here, it invests in Apple, Microsoft, NVIDIA, Amazon, Meta, Alphabet, Berkshire Hathaway. Okay, so, and you can see here how much it's weighted in each sector. So it's has a pretty strong representation in technology. And then financial services are next and healthcare is next. These are all good things. These are all companies you can pretty easily identify that are doing pretty well. And you can see them as individual stocks here. Now, what's nice is that it shows the symbols of those stocks. So let's say you're looking for, some stocks also to add in to your investing, but you want to maybe be more intentional, right, about the companies you choose. This is where you can start doing your research. You can click on these symbols and you can look up Apple. You can read all about Apple and see what their earnings were like. You can get into the news around Apple. You can dive more deep, okay, into these individual stocks. Again, that's a lot of work to have to do. And if you're a busy person like me, or lazy like me, you'll just be like, I don't know. Do I want to, get into that? I encourage that to really as a practice to start getting more into being intentional with your investing and also to improve your gains because you can improve your gains if you're investing in things that are performing well and for companies that are growing really fast. So you can do this in an intentional way when the time is right. For now, I would say keep it simple and let's just stick with index funds in this course. That's what we're going to do here. And I just wanted you to see that you can see all of the different companies here. You can see the news also about the funds themselves. Okay, so if you like, go ahead and take some time and pull up Yahoo Finance, look at this for yourself. I'm going to give you maybe 2 other ticker symbols to practice with so that you can do this as well and get into looking up the different funds and seeing the difference between them. So I want you to remember that this fund here, that this Vanguard fund over a year did about 30%. Okay. Now for comparison, let's look at the Vanguard Total Stock Market Index Fund. So that one is VTSAX. And that one pulls up here. Now, this is also a good thing that this came up. This is a fund that has Admiral shares at Vanguard. Usually, there will be also another ticker symbol for a Vanguard Total Stock Market Index Fund that doesn't have Admiral shares. At Vanguard, when you invest at a certain point in dollar amount, they put you into kind of like the Admiral funds. They automatically do that for you. And it's a real benefit because those tend to be managed a little bit better. They have lower cost usually. So there's a lot of benefits to that. And that's something to note, if you're getting into index funds. When you first start, you'll maybe get into just the regular Vanguard Total Stock Market Index Fund. Okay, but I want you to see, the difference between them. Now, over a year, this one's also done about 30%. So it's doing well also. And if you look at the chart, it looks pretty similar to the other chart. Okay. And if we scroll down, we can see the expense ratio is cheaper. That's usually the case with Admiral funds. They tend to be cheaper, okay, in cost. And if we look at what their holdings are, it looks fairly similar. It's heavily weighted in technology, financial services, and healthcare. And we see those same stocks, right? So this is where I want to make the point that you don't need to be in multiple index funds. You can if you want to try to get some diversification, but remember it's already diversified by being in one fund. Okay. So you don't need to worry about, oh my gosh, I got to pick like 3 or 4 of these. No, you can just start with one and you'll already be diversified. That's why I love index funds and why I think they're so easy. Because when you pick one, it's like I'm in almost 500 different stocks here. I'm getting a whole blend of things. So I want you to see that we are basically like looking at different types of index funds that are maybe available at Vanguard in particular. They're going to have different ticker symbols at, say, Fidelity, usually start with an F at Fidelity. So I'm going to give you another one, the Vanguard Total International Stock Index Fund. So it's VGTSX. Okay. And so you can see here, let's go down to the chart and let's pull up the 1 year. And you can see this one over a year, 9.7%. That's way lower than 30%, right? Over a year. So I want you to see the difference, right? This is the 5-year chart on this. It's been going up and down all around. If you look at this red line, this is kind of like just kind of going sideways, this fund, okay? Listen to the name, Vanguard Total International Stock Index Fund, okay? This represents international stocks as well. So this is not just the US, this is the world, okay? And so you can see that just by going international, we're taking more of a risk, maybe. And also, this percentage isn't as great. This is what I look at initially when I'm looking at index funds. I want to look at a 1 year, a 5-year, and a 10-year chart because my plan is to keep that money going over time and let it compound. And I want to see that it does well over time. I want to see that over time it's growing and it's doing really well. Okay, so you can see over 10 years, it's like a 21%, right? And over 1 year, 9.7. So just keep that in mind. Again, the expense ratio isn't too bad, 0.18%. That's still much cheaper than buying most stocks and being in other types of mutual funds. And if we look at the holdings, here we go. Here's a whole different collection of stocks, right? Taiwan, Semiconductor, Novo, Tencent. There's so many different companies here from all over the world. And so that's important to look at, right? And to see, wow, like these are the companies, right? Do I even recognize these? Do I know who these are? For me, no. I mean, I don't do as much research, these days. I trade some here and there, but I do it with companies that I believe in and that are performing well. So you can do some research though by looking at these and clicking on these symbols and looking at the charts if you like, and really going deep on them. Again, we're not doing that in this course. It's keep it easy. Keep it easy. All right. So those are some examples of index funds. And in the next video, I want to show you how to go into, say, Vanguard and start your research by going in there. I'll show you how to go into the buy page and how to choose one of those funds and start the buy process. All right. I'll see you in the next video.